Hello, everyone. Good afternoon. Welcome to Stepping Up, Stepping Forward. What's next for Texas business? This is session one of four sessions, and we're going to discuss the 2022 landscape for Texas business and financing. We're also going to discuss the state's business climate and the availability of capital financing for growth-minded companies. My name is Donna Bragg. I am CEO, publisher of Texas CEO Magazine, Texas's premier media resource for business leaders. And with me today is Brad Campbell, corporate banking executive. He's with the West region of Regions Bank and Regions Securities. And Brad, I'm going to tell y'all who are watching a little bit about Brad. As a lead market executive for Regions Dallas office, Brad Campbell oversees strategic banking activities and relationships on behalf of Regions Bank and Regions Securities. And that's throughout Dallas, Fort Worth, and all of the surrounding communities that are just growing so astronomically right now. He has 14 years of North Texas banking and leadership experience with Regions, having spent more than half of his banking career with that company. And he joined Regions in February of 2008. Earlier, he served in commercial banking roles for First Horizon, First Tennessee Bank, and also South Trust Bank. And he is a graduate of the University of North Texas. So welcome, Brad.
Thanks, Donna. Thanks for having me.
We're so glad you could join us. And based on all of this experience that you have in Texas, can you talk a little bit about sort of the temperament of Texas business owners right now? They're managing balance sheets and risks. Is it as bold and brave as we think of Texas being? Is the temperament out there still just gung ho?
You know, I'd say it's resilient. And if you look at, everybody across the world was delivered a blow in March of 2020, or at least here in Texas. And you look at the number of jobs that were lost during that time. You know, through November of this year, Texas has restored 96% of those jobs. That says a lot about the resiliencies of the industries. Speaking specifically in the corporate world, for the clients that we serve, we've seen a number of our clients, tap the capital markets and raise additional capital to fortify their balance sheets to weather these storms, and they've done a fantastic job. You see in the news where banking deposits continue to be at an all-time high, and it's because everybody is fortified their balance sheets and trying to make sure that they are able to weather the storm. But you also see the consumer coming back in a lot of ways, and so I'd say as you look at the challenges, and look, they're significant, right? I mean, most recently inflation, which is a big one. It touches everybody regardless of economic background. Everybody's getting, having to pay more at the pump or in the grocery stores. You look at, workforce staffing shortages, regardless of industry. I mean, it's really rampant. Wage inflation, that's going to, continue on. Supply chain challenges, and, regardless of manufacturing or transportation. I mean, there's so many challenges along the supply chain. It's all happening in a perfect storm at once. And, as a business owner, how do you secure those supplies to be able to deliver your products and services to your client? That's a huge one. An unstable operating environment. That's one that, it's hard to deliver certainty and confidence to your investors, to your employees, when you don't know if we wake up tomorrow with a new variant. I mean, there's challenges abound. What I'd tell you is I've been very proud of the clients that we're working with, and a lot of the people we talk to in the market, how well and how resilient, those companies have been. I mean, they've responded extremely well. They've moved quickly to adapt to the new environment. You've seen, I could speak to Regions, in March of 2020, we moved 18,000 of our 21,000 employees virtual overnight. Hats off to our technology team. It was impressive. And then in the face of having to deliver PPP and those solutions along to our clients, you've seen a number of companies do the same thing. Like, they've found a way to operate efficiently in an environment like this. The one thing I would say, the general attitude of our clients are, they're out of the survival mode for the most part, especially in many of the industries that we serve. It's now what's to do next, right? They've got these great balance sheets. We're some version of normal, whatever that's going to look like. I think everybody's adapted to it. And then what's next? Is it M&A, buying somebody? Is it Is it, growing organically? They certainly have the capital on their balance sheet to do that. So, forgive me, my my light went out there. Anyway, so I would say everybody is very bullish on the economy and the opportunity, and they're looking to take advantage of what's next for them.
What is your impression of the marketplace for corporate and investment banking activity in Dallas specifically?
Yeah, so Dallas has always had a really robust corporate client. I mean, we have 45 Fortune 1000 companies based here in Dallas Fort Worth, and then obviously a number of others that are right below that. It's always been a robust M&A market. There's a number of private equity firms based here too. So there is ample opportunity, and the sense that I get is everybody's looking for the right opportunity. I would say what's at a premium right now, especially in the remote environment that we're all operating in at some level, people, our clients, our prospects are expecting a good idea. They're expecting some type of delivery of a message in the meetings that we're having, which has helped us raise our game. And our coverage bankers have responded extremely well. The partners that we work with, we really try and differentiate ourselves from our competition by providing senior level bankers at any step of the way on those opportunities, so that they're getting they're giving the right advice and opportunity to our clients and prospects. And I think that's been very appreciated. And I can speak for my team. We had a record year from a production standpoint. I think it was because we were delivering those strategic solutions at the right time.
And which industries and sectors are you projecting that will showcase the most growth this year?
Yeah, they're hard to predict. I would say it's going to be technology and technology-enabled services are going to continue to be very strong. Healthcare is going to continue to be strong, and the longer the pandemic stretches, there's certainly some opportunities there. We've seen growth in certain sectors within the energy space as oil's continued to rebound. Obviously that industry is very cyclical. Could pull back a little bit. We've seen a recovery in the hospitality and restaurant space. I wouldn't call that necessarily growth. I'd call it a recovery back to close to pre-pandemic levels. But if you look over 2020, certainly a lot of growth. I would think that the business service world, the technology space, is going to continue to be in very high demand and see very strong growth in 2022. You look at depending on if the federal government can pass some legislation around the infrastructure bill, the Build Back Better program, you're going to see some significant investments in infrastructure, which means construction firms and industrial service firms will have some really strong growth, but that's probably going to be towards the back end of 2022.
Mm-hmm. And then are there market signals or key trends you're aware of we should be looking out for?
I wrote in all caps, inflation is probably the one that, continues to get my attention. You certainly don't want it to get too much farther out of control. I wouldn't say it's out of control, but it's certainly, I think, caught everybody by surprise how quickly things have increased over a period of time. But the war for talent, and I would say this is the one time in history that the employee has a lot of power, a lot of voice, a lot of opportunity, and a lot of choice along the way. And speaking to a broad range of folks on this call, it's not all about compensation. And I think you've heard that loud and clear, especially with the sub 40 employee. Like, they want opportunity. They want, certainly compensation is a big component of it, but the right culture, the right mission, the right area for them to develop. It's something that here at Regions, it's one of our 5 key mantras is putting people first and trying to really build a great culture around and a collaborative work environment so that people feel like they're nourished and developed and have opportunities to grow. And I think that's something that everybody could learn from, develop from, and help, build the right culture so that it's not all about, moving across the street for another dollar.
It's interesting that you called it the war for talent. It is sort of like a war out there. I hear it constantly in our conversations with various business owners. So tell us about Texas Are we well positioned for an economic boom in 2022?
You know, I would say, as resilient as this economy's been and as diverse of an economy as we have throughout the state of Texas, I certainly see it as in a positive growth. I mean, all the statistics from an employment standpoint to the number of companies moving to the state of Texas, the population growth across our major metro areas, we're well positioned for growth. Label it a boom, absolutely we could, because we're going to probably outpace the rest of the country. But certainly, I don't have a crystal ball and know like what next variant of COVID comes or other challenges that people are going to face. I mean, there are some things that could potentially, hinder that. You look at supply chain, continued struggles in the supply chain. And I was watching a news report this morning that, semiconductor chip shortages are going to continue probably till the back half of 2022. Well, we were supposed to be here and see the end of that already, and it's continued to languish on. So, consumer goods, obviously we've seen in the automotive industry and several others that are really languishing, and everything that we're doing, especially in the technology enabled world that we live in, are going to require, those type of inputs. You think about home building and, the shortage of housing, you and I were talking a little bit earlier about that, being able to get houses complete on the ground in a timely fashion with all the parts, has turned into a challenge. So, there's certainly some things to be on the lookout for, but overall, looking at the industry sectors that operate here in Texas, I certainly see it being a strong year for many of our industry sectors that we support.
So, how does Texas business growth compare to national trends? I mean, we hear all the time about residential, real estate growth. What about the business?
I've spoke to our commercial leaders around the state, and I can speak specifically to our portfolio here at Regions. I mean, we've seen tremendous growth through a number of sectors, but it's sector driven. And so obviously there are going to be some certain sectors that are going to be challenging, but consumer goods, obviously technology enabled services, things like that, double digit growth last year. The hospitality and restaurant space had strong growth, but again, benchmarking it back from 2019, still not fully recovered, and is going to be a little bit choppy as we navigate through the pandemic in its current form. So overall, it's been a very positive story. I think the outlook is strong, with the overhang of a little bit of uncertainty along the way, trying to navigate through that.
Let's talk about the basics of business financing. So, for those in the audience who may own a business or maybe they're just getting started, what are the different types of business loans that are available in Texas?
So, I think the biggest one that people hear about, Regions Bank is a preferred lender in the SBA, and I would say for somebody just starting out, that would probably be the best route to consider. Starting off with an SBA loan, depending on where you're at in the life cycle or the industry you serve, there's, angel fund investors, there's private equity investors, there's different avenues to explore. But if you're looking at, kind of a traditional, you have an idea, want to start up, SBA would probably be the place I would start.
Okay.
In the state of Texas, overall, they have the Texas Enterprise Fund, which is what everybody hears about. That one's really delivered for large corporations moving in to get some incentives to justify the move and absorb some of the costs there. But they have a number of programs to support other growing businesses along the way. And I would encourage everybody to peruse the governor's website there. It's the gov.texas.gov/business, and there's a number of opportunities there. But there's a number of not-for-profits that operate as angel fund investors and other resources out there. So I would encourage you to be curious and explore that. And but certainly from a traditional banking standpoint, SBA is probably the best way to get started.
The best place to start. So, what do you need in your business plan to ensure that you do get approved for a loan?
So what I'd say is it goes back a lot to relationship and understanding what the ask is. And I would tell you that in the life cycle of companies that I've dealt with, and I've dealt with companies starting up from scratch, getting their first SBA loan to large corporations. And it really is, especially in the smaller and the middle market space, it really is having a partner that understands what you're trying to accomplish, and being open and vulnerable about what your potential pitfalls are. Because, our job is to analyze and look at the potential risks and understand that. If there's too many things that we don't understand about the business, it's easy for a banker to back away. And so, that's something we take great pride in at Regions, to really dive in, roll up our sleeves, and get to know that business owner. And so for those of you watching, I would highly encourage you to really try and take a step forward to deepen that relationship with your bank, so that they fully understand what you're trying to accomplish, so they can help you meet your goals. Because we're all trying to help our clients grow and develop new opportunities.
We talked about that a little bit earlier, the challenges involved with the COVID world and not meeting in person, but those relationships are super important.
They are. Yeah, it was, I think everybody has had their limit on virtual world. I think there is some relationship building that everybody enjoys at some level. But again, I think everybody's gotten better at operating through this type of environment. And so, it's hard to build rapport virtually, but certainly, the more open you are, the less closed off, the more you share about where your ultimate goals are. For a bank like us, who really focus on, helping middle market companies grow and develop, and we have our product suite built around that, the better we know and understand the strategic vision for the client, the better we can help execute. Because timing is very important in all that, and getting those things lined up at the right moment so that you're positioned well for success and it's not too much of a strain is important in a business's life cycle.
So are there any new policies that can help businesses stay afloat or get off the ground this year?
Not new policies. No, what I would say is, you look at the worst case scenario, right? It was March of 2020, and the SBA and stood up the PPP loan lending program. Regions, we completed 55,000 applications in just over 90 days and delivered a technology solution to help navigate through that. Know that there's those type of resources that would come back if it absolutely had to. But continued lending in the SBA world, if you're not quite at that stage yet, finding the right angel investor that would be a great partner to help you start your business, develop and grow, would be a good place to start as well.
Mm-hmm. And when does a small business become sort of a middle market business? And then how does that change the company's financing needs?
I'm going to give you the banker answer. It depends, right?
We want the banker answer.
That's right. I'd say generally speaking, as companies grow up, through their life cycle, once they hit a certain threshold, there's more opportunities afforded to them. And so whether you're just starting out and trying to scratch out your first profit, your first positive cash flow year, the better you do there, the more traditional bank financing opportunities you get. As you step forward and go towards $10 million of EBITDA cash flow, that affords you some potential enterprise value lending opportunities. As you grow up into a $50 million EBITDA business, there's other capital solutions provided. So, again, depending on where you're at in your life cycle, there's a number of opportunities and avenues available to you. And every financial institution is a little bit different. So again, knowing your partner and I would suggest to each one of you that believe that your bank is your partner in this, because they play a vital role. The better you know your partner and the better your partner knows you, the better chance you have to succeed long term.
And every company is certainly different, but when does it make sense maybe to consider a merger or an acquisition deal?
Again, I'll go with the banker answer. It depends.
Okay.
And so, look, I've seen companies as small as $1 million of revenue, make an acquisition. Is it the right fit at the right time? If you're honest with yourself, you're looking at yourself in the mirror, is this the right challenge to take on? And, there are times where, we've had to say no to loans because it was a great growth path and a great opportunity, but it wasn't the right decision based off of infrastructure. And then there's times where we've really leaned in, and again, really thinking about that partnership that we build with our clients at Regions, we really try to provide that right advice at the right time. And that's not done by just the banker. That's the professional team we have built around the bankers to help with all those different solutions, because, we need those experts to help, provide that good advice to the clients. And so, I've seen clients that have, been 75 years old, 75-year-old business that have never made an acquisition because it wasn't the right fit for them. But then I've seen others that have been highly acquisitive and have built their entire business on mergers and acquisitions. And so, is it the right fit, right environment, right people? The one thing I would say, looking back in my career, some of the deals I wish I would have had another opportunity at, are the ones where it all looked great on paper, but culturally, the two companies coming in together, it just wasn't a fit. And you look at what went wrong, it's the wrong culture, wrong expectations as they tried to merge those two companies together. And that's always a huge challenge. So
culture
that's
is one
something
of
I'd be
those.
looking out for.
Culture is just one of those hard to identify, but so critically important aspects of business. I find it fascinating.
It's not, you know what, it's one of those things it's hard to measure. And I know there's several companies out there, Regions uses Gallup, and it gives us a great look into, are we sticking to our core values and really delivering on our mission to support our clients, support our folks, but it's a hard one. It's almost a gut feel. You need to make sure it's aligned, and a lot of that gets solved through communication. And the more if you're thinking about it in an M&A context of looking at the company you're acquiring or merging with or being sold to, is it the right fit? If you're the seller, right, you've reached a point in your career where you're ready to sell your business and go on, but are you okay with the culture of all the employees that you've helped develop and nurture along the way, moving into that new culture? Is it the right fit? So to your point, there's a lot to consider. It's not easy. And the way I look at it, somebody like Regions, we can help provide and be a sounding board and listen and, give suggestions along the way. And I think we do a great job of that.
So for a company that's in middle market growth stage, what are some of the considerations when it comes to choosing corporate or investment banking partners?
One of the key things is it the right firm for what you're trying to accomplish? And so, is a firm, have a storied track record executing in the market you're serving. And so you look at, here at Regions, we just bought Clearsight Advisors, which is a technology-enabled services M&A advisory shop, and that's what they do. That's the expertise that they provide. And Black Arch Partners is another M&A advisory firm within our umbrella. They have strong focus in other areas, healthcare, energy, and some others. And so you have the right provider there helping you deliver. You certainly don't want a business services M&A advisory shop trying to talk about the hospitality and leisure space, right? So I'd say make sure you find the right partner and make sure it's the right fit, that they're listening to what you're wanting to accomplish, and that they provide the right opportunities for you as you embark on that path.
So let's go back to sort of the general business landscape in Texas. Are there statistics or trends in Texas regarding business over the last year that surprised you?
I think I was proud of how resilient the market was, and I think top to bottom, so small all the way up to large corporations, how quickly everybody moved to fortify their business and protect their employees. I think that was something that, looking back, it was very impressive. Inflation continues to surprise me. I shouldn't have been surprised when you hear supply chain challenges. You kind of feel that coming, but you look at the government programs trying to keep employees afloat that we should have put in place in 2020, the lingering effects, with people leaving the workforce, and not rebounding as quickly as I thought it would. That still continues to be a surprise. We'll see what that looks like, as we go through the rest of 2022. And then, competition for talent. I mean, it was bad
That
before,
war.
but it continues to ramp up. Yeah, and it really is. And you think about the broader landscape of the shutdown. You think about like a technical school that shut down and didn't have graduates because they were shut down for 3 months. Well, those are new employees that kind of come into the workforce, right? So we're behind, 12 to 18 months, and whether those enrollments look like. How are those, how are those folks coming along and developing? I mean, you think about, I have school-age kids, and everybody has experienced a different level of interruption in their school program. Like, how are those kids going to be impacted over the next 5-6 years? Kids coming out of college, and so there's again, it's a supply chain issue, even from a human talent perspective. Are they being developed and trained, and are they ready as they have been in the past to step into those roles? So those are the things that continue to surprise. And then the lingering effects. Maybe naively you're listening to supply chain issues, believing that was going to be wrapped up by the end of the year, and here it's still pretty relevant and pretty challenging. And I think a lot of those things are here to stay until we're come to some sense of normalcy, whenever that comes.
One of the things you and I talked about recently was the just unprecedented residential real estate growth throughout the state. And you mentioned that bankers are providing loans to builders a little bit differently. Could you explain a little of that for us?
So you look at 2007, 8, and 9. You look at the previous political agendas from the president, so President Clinton all the way to President Bush. Like, there was an encouragement of home ownership, right? Mm-hmm. The banking environment really centered around trying to provide those homes, and the country was in a state of growth. So you look at certain markets and certain banks, like they were, it was much easier to get a real estate development loan or a lot loan. Those dynamics have changed. And so again, looking at supply, there's not near the supply of lots or, developed lots out there that there has been in the previous bubble. So you look at the challenges that we're all facing in the housing bubble that we're seeing. I don't see it the same way as it was in 2008 and 9, because there was so many undeveloped lots out there ready to build. They're more developed than there was capacity to take them down. Now you look at supply and demand in certain subsectors, and there's probably 2-3 times demand for the houses being built. So it'll taper off and it might level out, but I don't see this being a traditional housing bubble that we had in the past.
You were saying in your neighborhood, you've definitely noticed pricing changes since you moved into your home.
Sure. Yeah, we're fortunate to live close to a corporate headquarters relocation, and there was an analogy of there's 1,000 people coming in looking for high-end homes, and there's somewhere around only 100-ish homes available. What do you think is going to happen to the price? That's what the builder told me, that works in our area. And so you see those challenges. Again, it's a great benefit of the job that our current governor, as well as our previous governor, did of recruiting companies to various areas around Texas, and it is statewide, but it is putting a lot of pressure on the infrastructure, on housing, on other segments. That, look, we're Texas, we're going to fight through, and we'll be just fine. We'll come out better forward on the other side, but it's just some growing pains that we're having to live through right now.
Sure.
Further stressed by the pandemic and supply chain issues and some other things along the way.
We do have a question. Are there revenue size breakdowns for commercial versus corporate?
Yeah, so you talk to one of the 250 banks that operate in Dallas, you're probably going to get a varied number of answers. Well, I can tell you at Regions, the way we look at the split between commercial and corporate is, one $1 million to $250 million in revenue is considered commercial. 250 million and up is considered corporate, the way we look at those companies. But, think about publicly traded companies with complex capital structures. They have term loan Bs, they have public debt. Those are the companies that we're really focused on in our corporate world, where our commercial bank is really dealing with the privately held companies. And, you think about like a fuel jobber could do $2 billion a year, but they have a very, thin margin. It's a pretty simple business. That's far more of a commercial client than it would be a corporate client, the way we think about it. I know other banks have a break at 500 million. I know others that are at $1 billion, but everybody talks about it a little bit differently. The way we look at it, Regions, it's the complexity and the talent of the people. We have great commercial bankers on our platform that are well-versed in lending to dealing with privately held companies. And we have extremely talented corporate bankers that are used to dealing with publicly held companies and delivering those products and solutions. And so for us, it's really important for us to have the right people in front of our clients, so we're giving the right advice and helping them achieve their goals.
It's interesting to me how competitive banking is now.
It is there's no shortage of it, especially in a government-related industry or government regulated industry. It is extremely competitive. And, look, I think that's it's great for the borrowers. It's great for the folks on this line, because you're going to get a number of banks to talk to you. And it really is a compliment to the state of Texas and how great of an economy it is, how resilient it's been. The best years of my banking career were 2008, 9, 10, and 11. And I'm not sure many bankers could say that. Well, but I was in a great market in Dallas, and we had great companies to work with and help and support along the way. So
you've talked so much about the importance of building a good relationship with your banker in any size company. It sounds to me as if you're welcoming the conversations and that there's capital that you're ready to invest.
Yeah. Look, anybody who has an investment grade profile can borrow money from banks, but if you don't have that good relationship, and look, anybody who's operating their business and having great years, good steady revenue growth and good EBITDA growth and managing their costs effectively, and they're operating very well, anybody would lend money to that type of business. Mm-hmm. But nobody's perfect, and there's hiccups. And so you'll find out who your friends are when you hit a speed bump. And my point to that is, if you have a good relationship with your client, you can weather through those storms. If you know what those pitfalls were. In some cases, you may be able to avoid those pitfalls along the way if you've got a good relationship, because you've got somebody else who I'm biased. I'm on the banking side. I view us as a partner to help you execute and focus on growing your company and not have to worry about your banking and financing solutions.
Mm-hmm. So is there anything, Brad, that you would like to add to the conversation regarding the state's business climate and the availability of financing for companies?
Yeah, what I would say is, again, I'll speak for Regions, but I can speak to the banking industry in general. Like, we're open for business. Certainly we want to lend to companies that we know well in the industries that we serve and we have expertise in. We certainly want to help clients, live that American dream and, start something special, have a great idea, support them along the way, grow it all the way up to when they want to exit, either going public or selling to a private equity firm or the like. And that's something that we take great pride in. I know personally that's what gets me up in the morning. I really want to help these entrepreneurs. I've been extremely blessed in my career to be able to work on a lot of exciting opportunities and really help deliver something that I believe makes a difference. And so, again, all those things happen because of the relationships that I've had. And, I can't stress it enough, that the better connected you are to your financial provider, the better opportunity you're going to have for success in the future.
Are you at liberty to share any of your specific success stories?
So I'll talk in generalities as best I can, but we were dealing with we were approached on an opportunity for a company that supplied paper and wrap to a fast food company, and I came in at a time when, certainly it didn't, they were frustrated with their current solution, lending provider, and we were able to deliver a solution. Fast forward, because of a great relationship that we had, were able to move into providing bread to another fast food company, and we were able to provide a project finance opportunity to $60 million project finance opportunity to have them build, basically for their production machines, and they were building a factory along with it. And those things turn into a great relationship. That company now is, one of the largest providers in that area, 200 million plus of revenue, and has been a great relationship. But, not many companies can get financing 13 months prior to revenue. Not many relationships are founded overnight where we'd be willing to lend in that situation. Those situations that happen, it was a 13-month conversation with a lot of yeses and nos along the way, but we finally got to a solution that worked for both parties, and it's been a great relationship for us. Those are the ones that are the hardest ones, are the most fun for me and my team to try and roll up our sleeves and figure out the right solution. Doesn't happen all the time. There's some no's along the way, but those are the ones you look back and you feel really proud of that you're able to accomplish.
Those are the most fun. Generally, the things you work the hardest at are the most fun especially when they succeed.
That's right.
Brad, we thank you so much for your time today, and we thank everybody for joining us today. That's all the time that we have, and we want to make sure that we remind everyone to register for session 2. That's coming up this Thursday, so 2 days, and that will be with Texas CEO Magazine owner Joel Trammell will be your moderator, and Joel will be talking with Houston market executive John Stacy about how the ideal commercial banking relationship can generate corporate growth. And so it's along some of the same lines, but a different specific line. And we hope you all have a great afternoon. We will see you again on Thursday. Thanks, Brad.
Thanks, Donna. Appreciate it.
Bye-bye.